Trevor Shakiba here, certified financial planner and president of Shakiba Capital. Thank you for your interest in the flats on Archer. I'm going to do my best to keep this around 15 minutes, go through high level this opportunity. We're very excited about it. We think the location is phenomenal and there's significant efficiencies on the expense side and opportunities to increase revenue. So let me get going here. Some basic info is there's 62 units. All units, by the way, have a balcony, as you can see here, which is really cool and very unique for a downtown location. Good size units as well, with a multitude of floor plans. It was built in 2018. It's always been 95% to 100% occupied. Purchase price is $17.4 million, and we're raising $5.3 million in capital. A little bit different opportunity than the ones we've presented in the past. This is definitely not a lease up like our Northwest Arkansas projects, and it's certainly not a traditional value add with a 1970s or 1980s Class B property. Here, the rents are just low based on comps, and then we think there's the opportunity to manage it more efficiently and also find different avenues of other revenue streams. So you can see the returns, they don't look that different except for the cash on cash and the yield. So right out of the gate, we're not going to have significant distributions. We hope that comes over time. There is also a little difference is there's a commercial space, which we hope we can make into two spaces. So you can see this here, this area down here, we did have a construction firm there, and we're currently looking for the right partnership with, coffee shop, downtown grocer, high-end hair salon, and we think we can also find additional space from the lobby to get a second resident. Here's my executive summary. These are just highlights. I'll let you read through them. Table of contents, a little bit about us. For those that don't know, we started a financial planning and wealth management firm in 2003. Wonderful career, sold that after about 15 years. And really, we're just looking for investment opportunities outside the stock market for us individually. And came across multifamily real estate and did that for ourselves and thought it would be a great opportunity to present this to other investors in a way that allowed them to partner and see all of the benefits that commercial real estate can provide. This is some of our other properties. Reserve at Tinytown is in Northwest Arkansas. It's a lease up. Brookwood on 86. It's an older property in Owasso, and Echo Trail is a mid-80s property, value add, also in Tulsa. Our thesis is really unchanged. We believe that there is not enough affordable places to live, and COVID has accelerated a redistribution of our population where it was already starting, and it's only continued and accelerated as people look for warmer weather, more pro-business areas, more space due to COVID, not to live right on top of each other. And this property will actually speak to this. Companies are much more open to remote workers. And for this property, it's approximately 50% of all residents are remote workers. Obviously, inflation is a problem. One of, if not the best, inflation hedges through multifamily due to short-term turnover and rents, lease agreements essentially. We think it provides a recession-resistant opportunity. Everyone will need a safe, clean, affordable place to live. And we think we have the team to be able to do really good things with multifamily. This is the summary. Again, it's a great looking property. If you look, really well done, well built. Here's our floor plans. Again, it's 1 and 2 bedrooms. These are the smallest one-bedroom floor plans. There's a number of different ones in between, and this is the smallest and largest two-bedroom. Here's some unique features. Again, it's a downtown location. It's a different type of resident than what we've done before. Fantastic clubhouse, two-story fitness center. We plan to improve that. We do have a conference room, but we're thinking we can probably adapt that into storage, as no one really uses the conference room. Rooftop terrace and kitchen. That's a really cool space at the top of the complex. Elevator. Every room has a balcony. Valet services, pet washing station, and electronic charging in the garage. By the way, we have 30 parking spaces, so you can see some of these pictures. Here's some additional pictures. This first one in the top left-hand corner is the lobby. We're going to take some space from here potentially and add it to the commercial space. This is really unused. So if we can get a sandwich shop, a pastry shop, a coffee, I think that we could really, really add an amenity to residents and another $1,000, $2,000 a month. So right now, everybody just walks in and out. No one's really using this space. Top right-hand corner, top and bottom left-hand corner are the rooftop terrace. Outside, really cool space. And then inside, really nice. That's where everyone hangs out. And then the bottom right-hand corner is just, it's just the lobby area again, which I think we can do improve. Features, washer, dryer, balconies. They're really, really cool. Really, really nice layouts. Here's our mix, mainly one bedroom and two bedrooms. You can see at the right side, the rent per square foot. This is what makes this an opportunity. It's skewed a little bit because of the commercial, but it's really 165, 166 per square foot, and we should be closer to 2. That's what the other comp suggests, which you'll see here. So this might be a little small, but look at the bottom right per square foot. $2, $199, $197, $202. The Cosmopolitan is the asset that Jared Kushner's firm just bought. And our location is substantially better than this. It's not even really downtown. Here's some others. Not as good of comparisons. The view is actually a really good one because it's right down the street. It's on the same street, Archer, and you can see they're at 204. These others are a little bit older, but here's the point. Look at the per square foot for flats on Archer. Way low. Here's the location. The Jared Kushner properties here, number 4. And you can see that isn't even really downtown. It's not walkable like these other assets are. A little bit about Tulsa. My connection back to Tulsa is I went to college in Bartlesville, which is about 45 minutes north of Tulsa. It's a secondary market, and I like that. It's growing. Just went over 1 million people. You can see the unemployment rate. And just like Northwest Arkansas, there's not enough places to live. And so we think that downtown is in the middle of a revitalization. Lots of really cool things that are going on there. Here's some of our other properties, at least in Tulsa. We have Brookwood on 86 up here on the north in Owasso, Echo Trail, more in the Tulsa Union submarket. It's just south of that. And then the Flats is, as you can see, right downtown. A little bit more about Tulsa. I've said this before. It reminds me a lot of Austin. They're doing some unique, really cool things there. And it's not just me saying it. This is the former economic development director of Austin is now in Tulsa and said something similar. And you can read it there. Notice the chart to the left. That's what rents have done. Very similar to a lot of other markets that are in the Midwest, in the South, Florida, in the Sun Belt, if you will. So here's the financials. Not going to go through all of this, but the purchase price is $17.4 million. We are bringing a good bit of liquidity, of reserves to the project. 7-year hold. That's what I'm showing. Doesn't mean that we for sure will hold 7 years. This isn't like the Northwest Arkansas opportunity, which is in an opportunity zone, which means that we'll very likely hold it 10 years. Here I'm showing 7, but our first project we sold after 2. Exit cap rate is bolded just to show you that I'm being conservative. So it's not a ridiculously low cap rate for the area and the location. And what else do I want to point out? Rent growth on the right side, you can see we're being aggressive in years 1, 2, and 3. But I would point out, I think our projections are conservative because comps are suggesting that rents should be where we have them year 3 today. We also think there's opportunity on other income. And if we can figure out how to add a second commercial space, we can really significantly increase that side of the income as well. So just like all of our other partnerships that we've done, it's a 75-25 split approximately. I'm on the wrong page here. This is the debt, and I basically have this solidified, but not all the way. It's with a local bank in Tulsa. 75% is the loan to purchase price. It's a 3-year term, 36 months of interest only, and I think the rate is going to be closer to 5%, maybe around 5.15. It's been the most difficult thing we've done to date. If you're paying any attention to inflation and interest rates in the debt markets, it is very difficult out there right now. Below that, we've got a 74.2% to limited investors, 25.8% to the general partners, which is Christina and I. Distributions, when available, will be monthly. Minimum investment's $100,000, and Christina and I will be participating on the passive side, like we always do, or almost always we have. Approximately 6% we'll be bringing to the table, and this is only for accredited investors. Here's my pro forma for years 1 through 7. Oops, sorry. You can see that I've highlighted where the opportunity is. We've got to get rents to market, and we think just through better management we could do it, but we're also going to improve the property. There's not a whole lot of value add, but we do think we can improve little things like lighting, put mirrors in the fitness center, and maybe put a hot tub on the top deck, build out, make the commercial space really nice, figure out the lobby area, little things that Amy and Winfield, our property manager, are really good at. Overall, I do think there's some potential for expense savings based on how they're running it, but, taxes will go up based on our new purchase price. Here's what I think $100,000 for a limited partner would look like. Obviously, if you're investing more, the percentages won't change, but the yields and some of the other numbers would. Year 1 is not going to be like our other deals. There won't be as much yield or cash on cash distributions. That grows in year 2 and 3 as we really significantly get the property where we want it to be. Year 4, you can see it goes down because that is when we begin to pay down the principal. Now, I always say this, we can't predict what is going to happen with the economy, interest rates. My hope is in year 2 or year 3, there's an opportunity to refinance. If we do that and rates are actually lower, we'll be able to return some capital to investors, and hopefully that would significantly increase our distributions as well. But I'm not showing that. Who knows where we'll be with rates by the end of this year, next year. I certainly think we're headed for a recession, and I do think the Fed is going to have to pause, if not play the QE game again. That's to be determined and seen. You can see overall numbers. I feel good about this. I feel that they are conservative, and it's just a little bit different type of asset compared to the other ones being downtown and a mid-rise. Here's the actual structure for LPs. $5.3 million is the capital raise, which means there's 53 shares at $100,000 each. Each share will be 1.4%. Cash on cash return, total return on investment that I'm projecting. All fees are very straightforward and aligned with our investors. 1% asset management fee only if there's distributions. which means in the first 3 months or the first 6 months, if there aren't distributions as we take over the property, there is no asset management fee. Acquisition fee is 1, capital transaction fee is 1. That could be a refinance or a sale. Minimum investment's $100,000, maximum's $500,000. Amy manages all of our properties. She's the president and CEO of Winfield, and she's already got a number of properties downtown. This might be a perfect addition, actually, where we can split someone, because we really don't need a full-time person for this property, but they could use our office and still manage other properties, but we get a discount for that. Questions, I'll let you read through that. Terms and definitions, specifically what is an accredited investor. Here's your disclaimer, and here's us. So if you need to contact us, this is how to do it. Obviously, very excited about this opportunity. I think it's a great, if you've invested with us before in Northwest Arkansas or Echo Trail, this is a great diversification play. It's not in the suburbs. It's a totally different resident. The average income for this resident is 6 figures. And we did, or maybe we still do, we had someone that was making 7 figures. Some of our residents here don't even live here. They live elsewhere in the state of Oklahoma or in the suburbs, and they come in for a weekend to go and check out the Bob Dylan Museum or do this art walk and try, the restaurants down here. So it's very, very different, but there's significant opportunity. It's a great, great asset that I think can perform. And, based on what's going on right now, there's not many better places to be when you look at the state of the economy and the capital markets with inflation, keeping your money in cash. So excited about this. Appreciate your consideration. Please reach out if there's questions. Timeline, this one's going to move fast. I will probably have paperwork later this week and beginning that out, and we'll be calling for funds closer to the end of July, but our close is going to be in August, and then it's off and running. For those that have a spot in the reserve at Springdale, this will close before the reserve at Springdale. And just like we've done in other assets, we will hire a engineering firm and do a cost segregation study. We'll take all bonus depreciation available, and this is the last year for 100% of bonus depreciation. So, hey, thanks for watching. Really appreciate it. Kept it under 20 minutes, just over 18. Look forward to your participation and partnering with you on this, on the flats at Archer moving forward. Thanks.